I'm Jessica Minton for IB Times TV with your midday market update, and I'm joined again by Keith Bliss of Cuttone Co. Now, Apple's stock split this week. If you're an investor, when exactly should you play this stock? Do you buy now? Do you wait till after the stock split? What do you do?
Well, Apple, even though they had a little bit of a blip during the Worldwide Developers Conference, it's still trading at near its 52-week highs, and it's getting back up to that magic resistance point for Apple stock, which is $700. It's $50 away, but it's got close. I actually would wait to see what happens, because part of the reason that you're going to see the stock split is because it's getting towards that magic $700 figure, so it's going to be very tough to move off of that. But I think once it splits, then you'll have some room for it to move, because I'm sure as soon as it splits, the analysts, of course, they've already started to recalculate their estimates on the stock, and I've already seen some early estimates that will take the stock back above $100. So you'll get a better run, I think, if you wait for the split.
This is their fourth stock split since going public, but it's a little bit different because this is 7-for-1 instead of the previous 2-for-1 that they had. Why exactly is Apple having a stock split right now? And do you think this is because they want to end up on the Dow?
I'm not sure about the Dow. I suppose there may be some ambition there about ending up on the Dow, but I think they're splitting the stock for a few reasons. Number one is a $700 stock or $650 stock is not accessible to very many people. The other problem that they're having is that their institutional ownership is at a 5-year low. Many institutions have limitations on the value per share of stock that they can actually hold in their portfolios, so they're trying to combat that. Companies like to have a larger institutional ownership just because it provides them with more cachet and more validity in the marketplace. And also what happens is a lot of institutions that invest in stocks, they have almost a marketing characterization where on a retail level, investors that come into their mutual funds on a retail level, they will also buy the stocks that they hold into their portfolios. Again, $700 stock, that's not going to happen. So I think the stock split will accomplish a few things like that, but the primary reason is to make it more accessible not only to the retail investor but also to the institutions.
And finally, how does this impact Apple financially? Is their market cap still going to be the same?
Market cap will be identical. All it does is it just puts more shares outstanding and the float will be larger. When it comes time for them to report earnings, the analysts will just readjust to a split-adjusted earnings per share category, so that from this quarter to the next quarter, the financials will look precisely the same way. The other thing it does is that, remember, Apple still has a lot of the own stock, what they call treasury stock, in their own vault. So this split will also impact that, so they'll actually have more shares inside of their vault that they can issue later on in a secondary or tertiary offering, so they can get more capital in to do whatever they feel is necessary to grow their business. It's really, stock splits are good for a lot of reasons, and for this one, it seems to be lining up pretty well for Apple. Again, it's people like to complain about Tim Cook and give him a hard time and the people that work with him, but they're a lot smarter than a lot of people give them credit for.